Hey there, ever feel like your money just sits in the bank, not really doing much? Well, turns out, the whole money grows in your bank account thing might not be the whole truth. Sure, the numbers might go up with a bit of interest, but with inflation on the rise, your cash might actually be losing value over time. Not cool, right? But don't worry, we've got some insights on how to stop that wealth erosion and even create intergenerational wealth. Buckle up because we're talking about 5 assets that can make your money work for you. First up, let's chat about safe haven currencies. In a world where no currency is backed by gold anymore, geopolitical stability is a big deal when it comes to investing. The rich seem to know this secret, and that's why they stash their cash in Swiss banks. Switzerland's got one of the strongest economic systems globally, making it a safe haven for your money. Take the Swiss franc, for example. It's considered a rock-solid asset during crazy times like the Eurozone debt crisis in 2009 and the global financial crisis in 2008. People flocked to Switzerland to keep their funds safe from currency depreciation. And here's a cool tidbit. During the Russia-Ukraine crisis, when the US put sanctions on Russian energy trades, guess where Russia turned to? Yep, the Swiss franc. Demand for it shot through the roof, and the Swiss franc's value skyrocketed. In early 2023, one Swiss franc turned into $1.174, making those with Swiss francs in their pockets feel like financial wizards. Now, not everyone can open a Swiss bank account, right? No worries. You can still get in on the action with currency ETFs and forex brokers like forex.com. With as little as $100, you can dip your toes into the world of currencies and maybe catch a piece of that wealth multiplication magic. First off, hit up forex.com. They're like the gateway to the currency universe. You don't need a suitcase of cash to slide into the game. Head to their site, set up your account. It's like making a social media profile, but for your money. Alright, let's keep this money talk rolling and dive into something called sovereign guarantee. Ever really checked out the dollar bill? You know, it says it's legal tender for all debts, public and private. But what's the story behind that? Well, since 1971, when President Nixon bid farewell to the gold standard, the dollar became the go-to currency by US law. It's like the VIP pass for transactions. You can exchange it for pretty much anything. Now, here's the kicker. Even though no fancy fiat currency out there is backed by gold or anything tangible, they all lean on something called the full faith and credit of the government. Translation: your money's stability is as solid as the government backing it. That's why diving into sovereign guarantee investments is like playing it safe in the money game. Governments worldwide are the ultimate backstops. They're like the last line of defense. If a government were to default, it's basically a domino effect. The whole nation takes a hit. And let's be real, no government wants that on their watch. So, investing in sovereign guarantee is like saying, I trust you, government. Now, the smart move here is to dip your toes into government securities exchange. Government securities is like the VIP lounge of the financial world, where government securities are the stars of the show. Now, these securities are basically IOUs issued by the government. IOU stands for IOU. It's a written acknowledgement or informal document that someone owes a debt or obligation to another person. So, when you buy one, you're lending money to Uncle Sam, and in return, you get paid back with interest. It's like the government saying, hey, thanks for the cash, here's a little extra for your trouble. But hold up, not all government bonds are created equal. Go for the stable ones with those fancy investment-grade credit ratings. Remember the drama in 2009 with Greece's sovereign debt crisis? Yeah, the big guns like the IMF, Eurogroup, and ECB had to swoop in to save the day multiple times. If you're in the US, playing the sovereign guarantee game involves rocking with treasury bills, notes, and bonds. These aren't just pieces of paper, they're backed by the heavyweight champ of the global economy, the US government. Plus, they dish out better returns than just stashing your cash in the bank. Win-win, right? And here's the cool part, you don't need to be swimming in cash to join the fun. Just hop onto the Treasury Direct website or cruise over to the secondary market to grab some Treasury securities straight from the government. It's like getting an invite to the money-making bash without needing a special ticket. Easy peasy, right? So, when it comes to keeping your money safe and sound, remember, sovereign guarantee is the name of the game. Next is something called God's money. We're talking about the shiny stuff like gold, silver, and platinum. Now, you've probably heard that money's supposed to store value for the future, right? But here's the deal, governments are on a printing spree, churning out more and more cash to cover their debts. So, that dollar bill in your wallet? It might not be as mighty as you think. Let me explain why. So, when there's a ton of money floating around, it's like playing a game of too much of a good thing. The more dollars there are, the less special each one becomes. It's a classic case of supply and demand. When there's a surplus of something, its value tends to go down. So, with governments cranking out cash, the purchasing power of each dollar can take a hit. Your hard-earned money might not stretch as far because, well, there's just so much of it hanging around. That's why some folks look for other ways to keep their wealth secure, like diving into different types of investments or assets that don't rely on a printing frenzy. That's where the financial gurus drop some wisdom. Invest in things that are not only valuable but also hard to come by. Talking about precious metals, the secret sauce of the rich. Gold, silver, and platinum, my friends, are like the superheroes of your investment portfolio. When inflation hits the fan, these bad boys tend to rise in value, unlike your sad paper money. Let's rewind the clock a bit. Back in the day, around the 1950s, you could snag an ounce of gold for a cool $400. Fast forward to 2024 and that same ounce is strutting its stuff at over $2,200. And here's the juicy part. According to the Prime XBT Gold Forecast, a platform that provides financial forecasts and analysis, including predictions for the price movements of gold, we might be looking at a whopping $10,000 per ounce by 2032. That's like a five-fold increase in less than a decade, making your gold investments a real MVP. So, while regular cash is doing its slow descent into the abyss, gold is flexing and going to the moon. But hold on, it's not just gold stealing the show. Other precious metals are also giving the finger to the idea of letting your money chill in the bank. Now, if you're scratching your head about how to get that gold bling without buying the physical stuff, say hello to gold ETFs. These little investment sidekicks are budget-friendly and let you ride the gold price roller coaster without needing a vault for all that gold. Smart, huh? So, when the world feels like it's drowning in printed money, consider tossing some of your chips into the precious metal pot. Because while your dollar bill might be losing its charm, gold, silver, and platinum are the true rock stars of the investment game. Now, let's shift gears and dive into the world of industrial commodities, the raw materials that keep the gears of our modern world turning. While precious metals like gold and silver get the spotlight for being scarce and shiny, they also have a secret identity as indispensable industrial commodities. Take silver, for instance. It's not just for flaunting in jewelry, it's a backstage hero in the production of electronics, medical equipment, and even nuclear reactors. These metals are like the unsung heroes behind the scenes, making our daily lives tick. But it's not just about the bling factor. Other metals like cobalt, nickel, and copper are the unsung MVPs in the industrial world. Their unique properties make them irreplaceable in various applications, and you'd be surprised at how much they're in demand. Let's zoom in on cobalt. Since 2020, it's been the talk of the town. Why? Because it's a key player in making batteries for electric vehicles. And as the world shifts towards greener alternatives, the demand for cobalt has gone through the roof, causing its prices to double from $20,000 per ton in 2012 to a cool $40,000 in 2022. That's a 100% jump in just a decade. Now, I get it, not everyone has stacks of cash lying around to invest in raw materials, and storing them in your garage isn't exactly practical. Fear not. There are clever ways to get in on the action without turning your home into a warehouse. Ever heard of mining companies like Rio Tinto? Investing in their stocks is like buying a piece of the industrial commodity pie. Or you could roll with mining-focused mutual funds. They've got their fingers in the raw material jar, so you don't have to. And for the risk-takers out there, derivatives like futures and options can add a spicy kick to your investment mix. So, when you're thinking about spicing up your portfolio, don't forget about the real MVPs, the industrial commodities. They're not just shiny, they're the backbone of progress. Alright, let's talk about something we all dream about at some point: land and real estate. Now, accountants love to label land as a non-depreciable asset, and they've got a solid reason for it. It's like the VIP of assets because it's not just valuable, it's always in demand. I mean, since forever, land has been the hotshot resource everyone wants a piece of. We need it for everything: homes, schools, factories, farms, you name it. And guess what? With the world population booming, the demand for land is never going to take a nosedive. Now, here's where it gets interesting. It's not just the raw land that's a star, it's what you build on it that shines too. Residential homes, office spaces, commercial properties, they're like the A-listers of investments. So, having a slice of land and real estate in your investment portfolio is like having a secret weapon against the sneaky thief called inflation. Let's crunch some numbers, shall we? According to the smart folks at Bloomberg, housing prices did a triple somersault between 1992 and the 2020s. Yeah, there was a hiccup during the 2008 housing bubble, but overall, real estate knows how to flex its muscles when it comes to value. So, when the dollar is doing its disappearing act, land and real estate are your trusty sidekicks. Now, I know what you're thinking, real estate is the thing you think about when you're way down the road, maybe in your 40s, right? But hold on, my friend. You don't need to wait that long. Owning your dream home is awesome, but having a slice of the retail property market is a power move at any age. And here's the cool part, you don't have to be rolling in dough to make it happen. Talking about REITs, or real estate investment trusts. Think of them like mutual funds, but for the real estate world. In the US, one of the cool kids on the block is Ventas Inc., dealing with healthcare real estate like senior housing and hospitals. Or, if you're feeling adventurous, you can jump into the landlord game. Borrow a bit, snag some rental properties, let the rent handle the bills and mortgage, and watch the profits roll in. Also, collectibles. We're talking vintage cars, rare art, fancy handbags, limited edition watches, and even those first editions of iconic books. These things aren't just cool to have, they're like treasures that can grow in value over time. Take vintage cars, for example. Unlike your regular run-of-the-mill car that loses value the moment it hits the road, vintage cars are like fine wine, they get better with age. Autocar spilled the beans on a 1955 Mercedes-Benz 300 SLR Orleanhout coupe that was sold in 2022 for a jaw-dropping €135 million. Only 2 of those babies exist in the world, making them a car lover's dream. And it's not just cars playing the value game, art pieces are in on it too. Leonardo da Vinci's Salvator Mundi snagged a staggering $450 million at a Christie's auction back in 2017. Yeah, that's some serious cash, but the rich are willing to drop big bucks on these limited edition gems because they're like timeless vaults of value. Find the right buyer, and you might just hit the jackpot. Now, I get it, for us regular folks, investing in collectibles can sound like a distant dream. But hold up, online marketplaces like Whatnot are changing the game. You can sell rare baseball cards, comic books, action figures, and more, right from your couch. And if owning the whole shebang isn't in the cards, platforms like Masterworks let you own a piece of the collectible pie. Alright, that's the scoop for today. If you've got dreams of vintage cars, fancy art, or rare handbags, keep an eye on those unique pieces, they might just be your ticket to a future jackpot.